Their B-REIT, the Blackstone REIT, they've been very active in that area. But as Jim mentioned earlier, active again today with the purchase of American Campus Communities. It's a $13 billion transaction, and it's two of the Blackstone funds. It's both the B-REIT, which I've talked about a bit, but want to talk a bit more about because it's such an important product overall in the real estate industry and what it's meant there, as well as it is also their Blackstone property. It's a core fund, targeting like roughly a 7% return. But there's a look at American Campus this morning. Of course, the deal did represent, what was it, a 14% premium to yesterday's
close. Stock had been going up. Stock been going up.
It had been going up. And by the way, the cap rate, 4.25%. A couple of interesting things to note here at that cap rate. That was a cap rate that might have prevailed at the end of last year before rates moved up appreciably. And yet, despite that move up in rates, you're still talking about cap rates of 4.25%. And by the way, that's before CapEx, that's before SG&A. And so you really are talking about what? Returns of perhaps in the high threes, something along those lines. Student housing is what the key portfolio is here. Usually does trade at a spread to traditional rentals. There may be more risk, of course, because if you lose the tenant, you're not going to get a new one, right? Kids come for the semester and or the full year. But again, the fact that asset prices have really not come down despite that ramp up in rates is an important one here, as well as the overall growth of this B-REIT. What a product. It started not that many years ago, still taking in roughly $3 billion a month. It's one of the largest REITs out there. This is perpetual capital being put to use. Talking about roughly a 4% dividend. There has been capital appreciation. High net worth individuals approached by their broker. It might go something like this. Yeah, 4% dividend. It's Blackstone. It's real estate. They're the experts. Look at what they've done. Been capital appreciation as well. It's an inflation hedge. You don't have enough real estate in your portfolio. And boom, every month that adds up to $3 billion more a month going into this thing. That's why they need to spend it. And by the way, Starwood's got one called the S-REIT that takes in about $1 billion a month. The numbers are staggering in terms of what's come in here and what will continue to, and what it's meant really for the prices, therefore, that they're willing to pay. And again, they're not the most aggressive investors here. They use some leverage. Perhaps in this deal, they won't use any leverage. I don't know specifically. Maybe they'll put leverage on at a later date because it would appear that they'd have positive leverage right now. Maybe they think rates are going to come down. But, Jim, it's been an interesting asset class, to say the least, and this B-REIT has been the leader. Again, not a publicly traded REIT, but one of the largest out there, and every month getting bigger and bigger with bigger investments and big deals like this one that they are at least a part of. They're not the sole buyer. They're buying it with the other Blackstone funds.
You can't give up on things just because the Justice Department or FTC are tougher, because this is a deal. This company had the stickiest payments because it's parents paying for kids. They tend to pick areas where it's nice dorms, basically dorms their parents are paying for.
Yep.
And Carl, one of the things I recommended this stock 2 weeks ago is
good recommendation.
Thank you. Is that I thought coming out of COVID, this thing would people would come back to school. But I didn't think it would get a bid. It wasn't that long ago that people were staying at home. So it's a gutsy move. But I do think that I've always liked anything that involves parents paying for kids, having done that.
Shepard Smith here. Thanks for watching CNBC on YouTube.